Hi everyone, welcome back to G2's weekly market update, where we break down the key developments shaping global markets. For the week ending 20th March, markets remain volatile as central banks signal caution amid rising inflation risks, elevated energy prices, and ongoing geopolitical tensions. Let us take a look at how markets performed this week. United States. US markets ended lower in a volatile week, driven by rising oil prices and persistent inflation concerns. The Dow Jones Industrial Average fell 2.11%, the Nasdaq Composite dropped 2.07%, and the S&P Midcap 400 declined 1.34%. Energy stocks outperformed as oil prices moved higher. The Federal Reserve kept rates unchanged at 3.5% to 3.75%, signaling one rate cut this year while raising inflation and growth forecast. Fed Chair Jerome Powell highlighted uncertainty, particularly from potential energy driven inflation. Inflation pressures strengthened, with the producer prices rising 0.7% in February and 3.4% year over year, both above expectations. Housing data was mixed. Builder sentiment and pending sales improved slightly, while new home sales dropped to their lowest level since 2022. Meanwhile, Treasury yields rose, with the 10-year yield reaching around 4.38%. Europe. European markets declined sharply amid rising energy prices and geopolitical tensions. The Stocks Europe 600 fell 3.79%, with major indexes around Germany, France, and the UK also posting notable losses. The European Central Bank held rates steady but warned that higher energy prices could significantly impact inflation, raising its 2026 inflation forecast to 2.6%. Economic data remained weak. The Eurozone trade deficit widened while German producer prices declined. In the UK, the Bank of England kept rates unchanged but warned that prolonged energy shocks could push inflation higher while business confidence remained under pressure. Japan. Japanese markets edged lower in a holiday shortened week with the Nikkei 225 down 0.83% and Topix falling 0.54%. The Bank of Japan kept rates unchanged at 0.75%, noting that rising energy prices could push inflation higher. The yen strengthened slightly but remained weak overall, while the 10-year bond yield rose to 2.26%. Economic data showed moderate strength, with exports rising 4.2%, extending recent growth momentum. China. Chinese markets declined as energy price pressures and weak domestic demand weighed on sentiment. The CSI 300 fell 2.19% and the Shanghai Composite dropped 3.38%, while Hong Kong markets were relatively stable. Economic data was modestly positive. Industrial production rose 6.3% and retail sales increased 2.8%, indicating early signs of stabilization. The property sector showed tentative improvement, while trade tensions resurfaced as the US signaled potential new tariffs. G2 takeaway. This week highlighted how rising energy prices, central bank caution, and geopolitical tensions continue to drive market volatility. While economic data shows pockets of resilience, uncertainty around inflation and global growth remains a key focus for investors. That is it for your G2 weekly market update. Thank you for watching. Do not forget to like, subscribe, and share for more weekly insights from G2. We'll see you next week.